Today, as well as announcing another year of strong financial performance, we're also announcing that the transformation, as outlined at the Capital Markets Day in June 2015, is now complete. At that time, Steve Hare and I shared with you that following a root and branch review of Sage, we found the organization to be fragmented, misaligned, and inefficient. Sage had been losing market share and had been slow to adopt to the latest technology. However, we saw significant opportunity for Sage in a market currently worth over $27 billion, and with 50% of financial solutions tipped to be in the cloud by 2020. So the transformation was sequenced very carefully to address the issues that we'd identified and to capitalize on this market opportunity. Over the past 3 years, I'm pleased to say we've made significant progress. We have fast-tracked the shift to subscription and the cloud. We've integrated decentralized functions into one unified operating model. We've accelerated the strategy through the acquisitions of Sage Intacct, Sage People, formerly Fairsail, and Sage Compass. And finally, we've leapfrogged the competition, developing and launching a comprehensive suite of cloud products, unified through Sage Business Cloud.
Since the Capital Markets Day in June 2015, we have consistently met or exceeded guidance for at least 6% organic revenue growth and at least 27% underlying operating margins. We have also consistently generated free cash flow between 15 and 20% of revenue and maintained a progressive dividend. And whilst we've achieved this growth, profitability and cash generation, we've also strengthened the quality of the business model. In the transition to subscription, our recurring revenue is now 78% of total revenue, with software subscription revenue now representing 37% of total revenue, up from only 22% 3 years ago. In the cost transformation, we have identified over £100 million of annualised cost savings and reduced our general and administrative expense as a proportion of revenue from 19% 3 years ago to under 14% this year. We have reinvested those savings in go-to-market and product to drive further growth. And from virtually no cloud presence in FY14, when cloud products represented just £2 million of revenue, we now have £300 million of cloud annualised recurring revenue powered by Sage Business Cloud.
The progress we have made in the transformation has been significant. We've reconnected with our customers. They're telling us that they're the happiest they have ever been. Our Net Promoter Score, which is how we measure customer advocacy, has risen from a neutral score at the start of FY15 to a high of plus 25 at the end of FY17. And these existing customers and our new customers are now flocking to Sage Business Cloud. We now have the people, processes, and products we need to accelerate momentum in our markets. And we will continue the progress we have made on the shift to subscription and the cloud, combined with a relentless drive for efficiency and simplification.
FY17 was another year of strong financial results, where we delivered on what we committed to. We achieved 6.6% organic revenue growth, underpinned by software subscription growth of over 30%, an organic operating margin of 28%. We're also pleased to announce that 4 of our 8 regions grew in excess of 10% this year. These are Brazil, Africa, Middle East, Central Europe and Iberia. In the cost transformation, we have reduced our general and administrative expense as a proportion of revenue by 360 basis points, down to 13.8%. We delivered an exceptional charge below where we indicated at £73 million, and we've achieved an improved payback with annualised cost savings of £59 million. We have also maintained strong free cash flow, finishing the year at a net debt to EBITDA leverage of 1.6 times, well within our guided range of 1 to 2 times, and this even after spending around $1 billion on acquisitions in the year. We are one of the only companies in the FTSE 100 to have had a progressive dividend every year since 1999 and have again increased the dividend this year by 9%. So, encouraging results for the year, and we now have the foundation in place for accelerated growth as we move into FY18.
For FY18, our guidance for organic revenue growth is raised to around 8%, and our guidance for organic operating margin is also raised to around 27.5%. We will continue to maintain rigorous financial discipline to drive efficiencies and productivity throughout the organisation, and this is now business as usual. We're holding a Capital Markets Day on 25th of January 2018, where we look forward to sharing with you more on our plans for accelerated growth. And for more details, check out our investor website at sage.com. Thank you.